Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a smarter investor. Now, before I get to our feature interview today, I have to start with our stock of the day. I haven't done one of these in a little while, but when I bring you this information, I want to make sure it's relevant and important to you, our passionate investing audience. Stock of the day is Salesforce. Company late Tuesday rolling out Agentforce 2.0. What in the world is that? Essentially, it is a new set of digital agents that the company originally unveiled in September at its Dreamforce conference. New set of digital agents that come preloaded with various skills, can create marketing programs, do a bunch of other interesting things, also getting overlaid into the Slack division that Salesforce has owned for a couple of divisions. At the end of the day, these are agents or a new line of business for Salesforce that can make it more money. Co-founder and CEO Mark Benioff telling me the company has already signed 1,000 revenue-based deals for Agentforce. That would be up from 200 at the end of the third quarter. Ultimately, three reasons why I think you're seeing Salesforce shares absolutely rip higher since Dreamforce in mid-September, up I think about 36%. Like I mentioned here, with these agents, Salesforce is unlocking a new layer of sales and profits. The market loves to see that stuff. Number two, Benioff telling me he is remaining focused on operating margins. So despite the really big investment in agents and Agentforce, company's still going to try to focus on growing operating margins. And last but not least, and you can really, I think, get the tell, or there's a signal here to the market that Salesforce will have a role in the AI-powered workforce. That wasn't necessarily clear a year from now, but it's becoming clear right now as the company rolls out Agentforce. So that is our stock of the day. Let's keep this AI theme going, though, because Yahoo Finance is awarding our product of the year, drumroll please, to Nvidia's AI super powerful chip called Blackwell, winning our Product of the Year award. Now, be sure you can check out this fabulous piece of text content from our very own anchor, Julie Hyman, on the Yahoo Finance homepage, just going into great detail what Blackwell is, where that product franchise can go, and of course, explaining what we're seeing with Nvidia's stock. Be sure to check out all of our feature interviews on Blackwell on YouTube, and of course, be sure to check out more on our Product of the Year Nvidia on Apple Music and Spotify and other major podcast platforms. Now let's bring on our guest of the day, really, on this. B of A analyst Vivek Arya, good to see you again.
Morning, Brian.
You are the Nvidia master on the street. Really, I know a lot of folks really respect your work. Before I get into Blackwell, what it is, where it's going, what we're seeing in Nvidia right now, it's a correction. I mean, it is 12% off its highs in November. For the layperson out there, what's happening, and what do you think is driving the sell-off?
Sure. I think some of these are company-specific forces, and some of these are market forces. So if we start at the top, what we have seen in the market is a rotation of money from semiconductors to software. Semiconductors are more China exposed, software is less China exposed. So we have something that is a market force. Then specific to the company, the last 2 quarters have not been clean. Really because they are going through the growing pains of from one generation of product that was Hopper to the new generation of product. Mm-hmm. And if I go to where we had the most amount of enthusiasm was back at their GPU technology conference in March, right? At that time when Blackwell was rolled out, I think that sent a very powerful message that, to your point, this is the most powerful product. This is going to be the most innovative product, right? And since then, what we have seen is just execution, issues, keeping it out of the hands of customers. So 1 quarter, there were issues with the mask, right? Now they have been resolved. Second quarter, there were just issues in rolling it out in different system level configurations, right? Now that is also going to be resolved. But we have now had a period of 2 quarters where it is very unlike Nvidia to have these execution question marks and where estimates have not gone up the way they were supposed to. Now, in our view, these are short-term issues, right? That they will start shipping Blackwell from January, right? And some of these gross margin issues, they will start resolving by the time the product is shipped for a quarter or 2, because then they have scale, they are able to absorb a lot of those upfront costs. So we think it's a matter of waiting another 3 months before some of these product issues get rolled out. And meanwhile, when we look at the stock, it has now come down to levels where it generally right starts to bottom. Right, every time the stock has troughed over the last 3 or 4 times, it's been about 25 times or so next year's earnings. So if you look at next year's earnings, which are headed towards $5 or so, the stock is right around those levels. Right, so I would summarize it with some market forces, rotation of semis into software, and we have clearly seen the software indices outperform the semiconductor index. Right. For a while there, semiconductors were grabbing all the attention. We felt very good about that, but now it's time to share some of that attention. And some of these have been company issues, which I think will be resolved in the near term.
I remember you mentioned that that valuation point in Nvidia last time we talked, and I encourage everyone. Vivek was on a couple months ago. Go back to that prior podcast after listening to this one, of course, and you could hear some more thinking by Vivek, how he thinks about some of this valuation on Nvidia. But you mentioned execution issues. Is there any signs that Nvidia is complacent, or is this just the rules of the road when you're trying to change the game on technology?
Right. I think in some ways what they are trying to do is put what is essentially a lot of Nobel Prize winning physics into high volume manufacturing
Easy
in a
stuff.
space of years.
Easy stuff.
Exactly, in a space of years. Secondly, the Nvidia of old had to work on chips and boards. Now they are working on chips and boards and systems and racks and software. So many components have to come together. So in the past, they were worried about putting 1 or 2 GPUs in a server. Then that went to 8 GPUs in a server. Now they're trying to put the most leading 72 GPUs in one rack while putting switches and cables and connectors.
How do they even do this?
So that's exactly the thing, that the scope of problems has gone up. And then they're not the only one that is in the equation, right? You have people who are running the data centers. They need to get things like liquid cooling ready. They need to get the data center ready. So it has become a very, very big project management, operational and execution problem. So the whole supply chain, all the stars need to align all at the same time. So for them to slip things out by 1 or 2 quarters is not extraordinary. Perhaps in hindsight, where we might have gotten complacent is right after their GPU technology conference when they announced this product. We thought it would be perfect execution, right? That just because they have announced it, it means it's ready to roll out the next day.
Execution from Nvidia.
Exactly, right? And we saw some of this when they launched Hopper before or other products before, but this thing is just a lot more advanced, right? Because it also requires changes to the data center. It's not just them. Right? I need to put liquid cooling in the data center, right? And not every data center is capable of doing that. So that is why I think that some of these are growing pains. Now back to the valuation thing you mentioned, I think it cannot be underemphasized that when we look at the stock right now and compare it to its large cap growth peers, right? And I would really encourage everyone to do this exercise on their own. Just look at what you expect for earnings growth from all these large cap companies for the next year. And if I just look at consensus, that Mag 7, Mag 8, Mag 10, pick your whatever magnificent list you want to have, excluding Nvidia, they are trading close to 2 times their earnings growth rate for next year. Nvidia is trading less than 1 times.
And I should mention real quick product plug. You could do this on the Yahoo Finance platform. Type in Yahoo Finance relative comparison, and you can lay this out on your workstation. Go ahead, Vivek.
Exactly.
Quick product plug. I had to do it.
Yeah, no, absolutely, right? And so that's why we think that we have a confluence of some of these product issues getting sorted out. I think the China restriction issue will take a few more weeks of the new administration coming in, putting down the rules of the road. So I'm not saying we are off to the races. All I'm saying is that we are getting closer to a point where some of these issues will get resolved, whether it's the rollout of the product, whether it's rules of the road regarding China. And then meanwhile, valuation is working in our favor, which is always a very important thing for any technology stock.
Are we getting signs right now with this sell-off in Nvidia that the Nvidia investment thesis will be more complicated in 2025, more nuanced, and it's going to be harder to make money in the stock?
This is a $3 trillion plus stock, and look at any of these large, magnificent, whatever stocks. Each one of them has gone through this kind of soul-searching moment, right? Periodically. Right, when Apple was $1 trillion, right? I'm sure people had question marks. When it went to $2 trillion, people had those questions. Now at $3 trillion, people have. it's very natural for these companies, right? Because you never go up and to the right in a straight line, because a lot of things need to come together, and they don't always come together at the right moment. But when you step back and say there is a race between their customers, right? The first question is there demand for what they're doing? Then what is their execution, right? If you look at the demand side of the equation, there is no hyperscaler on the planet that does not want more accelerator chips, right? Because they are in a race to go and install this. And number two, the earliest products that they started AI with, right, the Hopper generation, Hopper was designed back in 2020 when generative AI was not even a thing.
Yeah.
So the first generation of all these large language models and generative AI has been served using in hindsight, an older generation technology. It's really Blackwell that we think is able to give it, this booster engines to help us go to the next generation of generative AI, which will actually be more monetizable than what we have seen before. Which is why to say that, okay, we are at the peak now doesn't make any sense, because we have not, it's like saying that the App Store does not work before the App Store has even come on the phone.
Yeah.
Right? Yeah. Now is when every one of these hyperscalers is installing their version of an App Store, where all these app developers are going to come, test their application, see what works, then we will find out what is monetizable. So we are still at the early stages of that, right? Which is why I think that there is a lot more upside ahead, right? And execution things, I think we are in the middle of that. This should be resolved in the next 3 months. And the day they start shipping Blackwell with no excuses, right, everyone can get what they want. We do think that the stock will get back to the trend line.
All right, hang with us, Vivek. We're going to go off for a quick break. We'll be right back on Opening Bid. All right, welcome back to Opening Bid. Diving into our Product of the Year award winner, that is Nvidia's super powerful AI chip. Of course, you know that is as Blackwell. Having a great chat here with BofA analyst Vivek Arya. You mentioned hyperscalers in demand, and I think what Microsoft CEO Satya Nadella recently said on a Bill Gurley podcast, and he seemed to suggest that he has enough supply. Now, Microsoft buys a lot of Nvidia chips.
Right.
How did you interpret that?
Sure. So I think that when it comes to Nvidia's Hopper generation, we thought that there would be an air pocket, that they would go from their data center business doing 25-30 billion to maybe taking a step back, and then we see Blackwell roll out. What has actually happened is that they have kept on improving supply of Hopper.
That's the prior chip.
That's the prior chip, which is why if somebody wants Hopper, right, it's not just Microsoft, right? We are seeing XAI build out a really large cluster with it. We are seeing demand come up in Japan. We are seeing supercomputers come up in Denmark, right? So we are seeing, and supercomputers come up in India, for example. So as the supply of Hopper chips is increasing, they're rolling out that deployment to customers beyond the hyperscalers, right? So that's why if you're a hyperscaler, you want Hopper, that is easily available. But when it comes to Blackwell, it hasn't even started to roll out.
It feels like it's been in the market for
exactly,
but it hasn't.
Because it was announced at GTC. Now, part of why it's important to make sure that all your partners and your supply chain are very familiar with your roadmap is because you need help from all of them, right? You need help from Taiwan Semiconductor. You need help from the memory companies, Micron, Hynix, right? Because just the cycle time for some of their products is 5 or 6 months, right? So you need all of them. You need Taiwan Inc. to come together, right, to get the product done. And then at the same time, you need to make sure that all these data centers are getting ready. Right? Think about it. Microsoft publicly has announced, their requirements for getting more nuclear energy over the next few years, right? If we were at a peak, would they be doing that?
Yeah.
Right?
Sure.
So that is the thing that, we come to these product cycles that tend to go for 2 years, then there is a transition to the next period. And whenever we go through that transition, there are always calls for, okay, now we are at a peak, now the trend is done, right? So that's why you have to step back and look at over longer periods of time that this is very consistent with what we have seen with prior product cycles. No, so to come back to your question, I think there is enough Hopper that, that there is enough supply for. And because Blackwell got delayed, some of that supply actually got freed up more for Hopper also.
So it's not a Blackwell demand issue?
No, not at all, because it hasn't even started rolling out yet. Right?
What I think Nvidia was somewhat caught off guard by this China Mellanox news, just based on the people that I've been able to talk to. How big a problem is it for you in the Nvidia investment thesis?
Sure. So Nvidia acquired Mellanox back in 2019, right, or so, and Mellanox is a very key part of their. If you look at Nvidia's data center sales, then the networking part of that is about 15 to 20% of those data center sales. More number of GPUs, the more number of switches and other cables, right? And Mellanox is what supplies that. When they got that approval from China, I assume that there were some commitments that were made at that time, and since then, and because Mellanox is a key part of a lot of China supercomputing deployments also, so I imagine it's now just making sure that those commitments, right, are there. But Nvidia owns Mellanox, all their deployments use Mellanox. So I don't think it has any implications to their go forward deployment. It's more a case of, and we don't know exactly what commitments they have made to China. So I assume it's more a case of just making sure that there is some level of dialogue as to what those commitments, right, need to be. The other aspect to keep in mind is that China used to be 20-25% of their sales. Now it is only 14 or 15% of their sales, and that too is spread across gaming. China is like a third of their gaming business, and there is no restriction in like shipping anything on gaming. A lot of Chinese automakers use their product in their autonomous cars and other level 2 plus cars. And then they have data center where they're using a lot of older generation chips. Now to connect those older generation chips, I need Mellanox to make the performance right capable. So the point is that the China relationship is an important one. It has come down as a percentage of sales as everything outside of China has improved. So it is a headline factor, but we don't think this makes or breaks the story.
Is a bad outcome that they have to divest Mellanox? What would that even look like?
I don't think so. I think that so first, we don't know exactly what the China commitments are, but they own Mellanox, right? It's a U.S. company, right? And Mellanox is a key part of their deployments, right? So I think it's just a matter of making sure that right, that there is a way to kind of keep that relationship, which is a very important one.
In the models that you work in, Vivek, have you made any changes or any assumptions regarding a trade war and how that might impact whether it's the multiple Nvidia gets or the financials it's able to produce?
Right. I think the friction between this, the largest designer of semiconductors and the largest buyer of semiconductors is right, not productive for what's a very important global industry. So in some ways, it's more than an Nvidia issue, right? It affects everyone. Like look at I mentioned Nvidia's exposure to China is about 15% or so. If you look at the semi-cap equipment companies, this year that exposure was 35 to 40%, right? So in some ways, Nvidia's exposure is actually just a third of what it is, right? They are not even at the leading part of where that China relationship, right, needs to be. So it is an overhang, I think, for the entire space. What I think all these companies are trying to do is make sure they are, of course, conforming with all the rules of the road that the US regulators are setting for them, but at the same time, at least going and serving right, part of China that has to do with their automotive industry or for their gaming markets, or even for a lot of their cloud companies. If you look at Alibaba, Baidu, Tencent, right, ByteDance, a lot of these companies, they're serving a lot of consumer applications, just like the cloud companies here serve a lot of consumer applications, and they use AI just as these companies use AI. So not everything that is done has some dual use, right, implications. But I think it's a matter of just making sure that right, that they are meeting requirements from both sides, which is why it's helpful to look at what their exposure has been over time. And today, as we look at their exposure, it's much lower than it is for the rest of the semiconductor industry, and it's much lower than what Nvidia has had historically.
In the last few minutes of the podcast, we always like to get some hot takes. I got a couple I would love to get your view on. Does Amazon and Broadcom, should Nvidia fear them? These companies clearly want some piece of Nvidia's pie. Should Nvidia investors be worried?
So we like Broadcom and Marvell. I think that custom chips and their networking expertise are very important. But if I look at, so let's just talk in terms of numbers, right? That's the best way to do it. So in 2024, Nvidia data center sales will be about 110 billion. Okay, Broadcom will be about 12, right? And Marvell's corresponding business would be about 700 million, just to put numbers in context. In 2025, right, Nvidia's data center sales will be close to 200 billion. Broadcom will be 17, and Marvell will be anywhere between 2 and 4. So what is the takeaway here? That when you look at Nvidia's market share of whatever is going on, it is 80 to 85%, right, in the next 12 to 18 months. Now, can this situation change in 26 or 27? Who knows? Because remember, 2 or 3 years ago, the buzzword in technology was 5G.
Yeah, 5G.
Now, nobody talks about 5G.
Nobody talks about
What's
5G.
going to be the buzzword in 26 or 27? What will be the spending for Amazon or Meta? How important will people be like CoreWeave in the industry at that point, right? So that's why I think trying to get frazzled by what may or may not happen in technology 3 years from now in such a dynamically changing market, right? In semiconductors, what I've learned over time, and again, I'll give you with an example. Intel has had its share or more than its share of execution problems. They still have 75% share of the CPU market.
Which you wouldn't.
Still.
You don't get that. You pull up a stock chart, you look at their financials,
Exactly.
and this is a company that is just falling on hard times,
Exactly.
so it seems.
Right? And the point is that in semiconductors, incumbency, scale matters, okay? Unless the incumbent messes up, it is very hard to dislodge them from a market share perspective. Why? Because they are the ones who get the first call when there is anything short in the supply chain. If Taiwan Semi is not able to produce the next generation chips, if Hynix or Micron don't have enough memory, who is going to be their first call, right? So yeah, you can have alternatives in place because that's just risk mitigation, that is just prudent, right? 100%, right? No doubt about it. But you have to look out the next 2-3 years, because when you are investing in custom chips, the advantage you have is you get the cost advantage, you get some more assurance over your own future. But now you have to guess what the requirements will be 2 or 3 years from now. You have to make sure that you get enough importance, as an Nvidia will, in the supply chain, and then you have to make sure that you invest in software and other resources on your own side. Because the one thing that's important to keep in mind, I'll make this the last point, is when somebody is buying a custom chip from Broadcom and Marvell, these are very advanced custom chips, right? No doubt about that. But there is no software expertise, right? There is nobody who is going and partnering with Accenture or ServiceNow or Oracle or anyone to bring a lot of that enterprise demand, right, to you. Now you have to do all that heavy lifting. That is the value add that Nvidia has. It is not just a chip. Which is why I'm amused when people say, oh, this chip is better than that chip, because it's not. It's like saying a sitcom is better than Netflix, so I can go beat Netflix. That's not the game anymore.
Yeah.
Right? You have to have that end-to-end, and that's why it's so hard to beat them.
Thanks for taking us to school, as always, on Nvidia. Vivek Arya, BofA analyst. Always a treat to have you on. We really appreciate it.
Thank you, Brian.
I mean, it's just impeccable analysis. You can send me the bill. I mean, we can pay for this stuff.
it.
Yeah, it's great. And really, be sure to check out all of our amazing coverage on Yahoo Finance's Product of the Year. That is Nvidia's Blackwell chip. Be sure to check out all the coverage on YouTube. You're going to see this opening bid episode posted there. You're going to see this opening bid episode post on Apple Music and Spotify and all other major podcast platforms. And of course, it's going to be all over Yahoo Finance throughout the day and the weeks to come. Nvidia is one of our most popular, probably if not the most popular ticker on our platform. Thank you so much. We'll talk to you soon.